Hi, welcome back. It's me again, Russell Slack, the founder of Guided Seasons Wealth Advisors. Most people think investment risk is just about market volatility. There's another kind of risk that's quietly eroding your wealth over time, and that is taxation. I want to talk about what we call tax smart asset allocation. It's not about taking on more risk, it's about putting the right assets in the right accounts. It's so that you can keep more of what you earn. Because how your money is taxed matters just as much as how it grows. Let's start with the basics. Now, most households accumulate wealth across three types of accounts. The first is a pre tax retirement account. It's like your 401k, your 403b, it's your traditional IRA. These accounts grow tax deferred, but every dollar that you take out later is taxed at the ordinary income. The second is your taxable brokerage accounts. Now, if we hold our investments for more than 12 months, it benefits from long-term capital gains, which is a much lower tax rate than our ordinary income's tax rate. The third account, Roths. Now, you know this. Roth dollars grow completely tax-free. There's no capital gains, there's no ordinary income, and there's no required minimum distributions later in life. So up to this point, you're thinking, yeah, I know this already. Well, here's where most investors miss an opportunity. They focus on what they own, not where they own it. Now, if we know that different accounts are taxed differently, then it makes sense that different types of investments also belong in different types of accounts. For example, do we get a tax write-off if an investment fails inside of our pre-tax account? How about our Roth? The answer is no to both. But inside the taxable brokerage account, we get a slew of preferential tax treatments. We can offset gains and losses. We can write off a small portion of losses even without offsetting gains. Additionally, this account can pass to our beneficiaries with a step up in basis, meaning they can get this money tax free as well. So if we get preferential tax treatment in the taxable brokerage account, we may need to reassess and have our higher risk or higher conviction investments inside of this type of an account. There's a caveat here. To get the most out of this account, we need to stay away from pooled investments like mutual funds and ETFs, or we lose control of what we own, when we sell it, and the taxes inside. So we want to retain control of that individual stock that gives us the ownership that we need. And because patience is rewarded here, again, long-term capital gains, tax loss harvesting, and that step up in basis all work in the investor's favor. Then there's the Roth. This is the premium real estate because Roth is tax-free, grows tax-free. Roth accounts are often best used for strategic growth, assets where future returns or tax rates, or we want to chase some opportunities without a tax burden. The flexibility here matters most. And that leaves us circling back to that pre-tax account. Most retirees in their global portfolio are reducing risk before or at retirement. They're putting low risk assets inside of their accounts. Think of it as adding a ballast to a ship. You know, the weight in the bottom that keeps it upright in the ocean when it's having its storms. We use these lower risk assets to pull income from, like dividends. And this means we want the dividends to come out of an account where they are already being taxed as ordinary income. This is the key point I want to leave you with. Risk isn't just about how much of an investment moves up or down. Risk also is about how much of your return you have to give up to the tax man. Two investors can earn the same market return but end up in very different places simply because their assets were located differently across these three types of accounts. Tax smart asset allocation doesn't eliminate risk, but it can significantly reduce tax risk, which is one of the few risks we actually have some control over. We want to take the right risk in the right account for the right reason. If you'd like to explore how it applies to your own portfolio, you can find more resources at guidedseasons.com. Thank you for listening. And as always, we're here to help guide you to financial peace of mind through all seasons of life. So until next time, be well.